Joyce Chang of JP Morgan's with us here on set, having witnessed our impromptu conversation with the House Speaker. Your thoughts and I guess your view on what time frame the market starts to really think this is in the living room, so to speak.
Well, we think that the X date right now is around the middle of August, around September. But we're going to get more news about this when we actually look at the tax receipts that come in. Could it actually be earlier, in July? But let's just say it's around September. The market will begin to focus on this 2 to 3 months beforehand. And then you really see that treasuries with maturities around those dates. Do you begin to see more action on that front, more funds that go into money market funds? But I think that, the concern really is that you have a number of new members in the House Republicans who haven't voted on a debt ceiling before. And what we can see is that the two sides have not laid out the issues. Now, this is often resolved at the last moment, brinksmanship in the last hour. But we have also seen that rating agencies seem like more inclined to downgrade on the banks earlier than what we had seen previously. So I think that the market hasn't priced this in. It's probably 2 to 3 months before the actual X date, which we'll have more clarity on in the next couple of weeks. But, you have just that the margin that we talked about, in the House is going to make this, I think, very acrimonious. And we don't have clear proposals that have been put out yet.
If in fact, Moody's or Fitch puts the U.S. on some kind of additional downgrade watch of some kind, or an actual downgrade, I guess it depends on how far it gets. What's that worth to stocks, do you think? Is it 10%?
Well, that is just certainly not priced in at this point. And you're already at a point where, at least in our last investor survey, 31% of the investors that we've surveyed think that global equities could be amongst the lowest performing instruments this year, or the asset class this year. So I think that, this issue is going to become top of mind probably by the early summer. Not right now, but I think it's very important that everybody, starts to watch this issue. But it's the margins and the brinksmanship, and that we haven't seen very clear proposals here. So I think that this could be something that, much like, what we've seen in 2011 and other dilemmas around the debt ceiling, where you do really start to have the market move, much more than what we have seen so far. But it's in the discussion right now. When we did our investor survey last week, we found that when the surprises out of the meetings we had in Washington, D.C. were just really how little had actually been done to move this issue forward.
Well, I was going to say, so just listening to the House Speaker, my impression is that it's going to be really hard, right? Whether he can get his own party on board. When asked about whether the Senate, not really my issue, right? And the president's not negotiating because the president thinks it's a budget issue and that you can negotiate then. So, I mean, everybody is so far apart. I'm not sure how it gets resolved. What did you make of his comments?
Well, I think, look, it's going to be brinksmanship, but some of these workarounds that we all hear about, debt prioritization, can you do a discharge petition? Like, some of these things would have to start right now. Like, if you look at the number of days it has to be on the legislative floor. So I think it is back to brinksmanship in the final hour again. And, if you actually then have to look at where would you cut expenditures, you actually end up starting with a lot of the military expenditures first being cut from the agencies. And it will raise more questions also on, what the revenue collection will look like. There are sort of very ambitious targets on what can be collected by the IRS that are sort of in the projections. But I think top of mind, debt sustainability is back to being top of mind right now. And, the increase in the debt burden that we have seen, because of the pandemic has meant that, at zero yields, everybody was kind of pushing this out. Now it is back at top of mind as a source of financial instability.
Say that again. Yeah, remarkable how it went away as a priority for several years. Joyce, I mean, it kind of fit with your sector outlook, even though it was a much different conversation than we expected. Thank you.
Thank you so much for having me.
Never know what's going to happen here at the New York Stock Exchange.